Hello everyone, welcome to Clarity for Sure. Today we will be discussing some of the important schemes that were in news related to the RBI for your upcoming RBI Grade B examination. Okay, so without any further delay, let's get into the session. So the first scheme is related to the Retail Direct Scheme, which was launched in the year 2021 by RBI and Government of India. What was the objective? The objective is very simple, is to allow the retail investors, that is the individuals, to directly invest in the government securities through a platform called RBI Retail Direct Portal, okay, in which the individual who wants to invest in the GSEC will be having an account opened with RBI in the name called Retail Direct Gilt account, okay. So what are the instruments available under this Retail Direct schemes? There are four instruments, which are the treasury bills, the dated securities, state development loans, and sovereign gold bonds, okay. And one important point which you have to note down related to this scheme is that there are certain services that is being provided under this scheme, the primary issuance participation and also the secondary market transaction based on the negotiated dealing system of order matching, okay. And the interest rate related to this particular scheme is not fixed, but it changes semi annually, which is linked to the national savings certificate, okay. And the interest for this particular thing is paid twice a year, once in the 1st of January and another is on 1st of July, okay. So this is an important key takeaway you have to note down from this particular scheme. And the charges, there are no charges, no account opening fee or no annual maintenance fee, but there are certain criteria like the minimum and maximum limit of investment, okay. So these are all some of the criteria. If we take treasury bills, it should be minimum of 10,000. For dated securities, minimum of 10,000. For state development notes, minimum of 10,000. And also for sovereign gold bonds, it should be minimum of 1 gram of gold, okay. So these are all the important points related to the retail direct scheme of RBI, okay. Moving to the next scheme, that is the integrated ombudsman scheme. Why this scheme was in news? See, earlier there were many schemes related to the ombudsman management. Now that all these have been unified into one scheme under the umbrella called RBI integrated ombudsman scheme, again which was launched in the year 2021 with the motto of one nation one ombudsman, okay. What were the earlier existing ombudsman schemes? Banking ombudsman scheme, NBFC, and digital transaction, okay. What is the coverage? This ombudsman scheme applies to banks, NBFCs with public interface, payment system participation, credit information companies, urban cooperative banks with deposit which should be greater than or equal to 50 crores. So this criteria becomes very important, okay. So what is an important key takeaway from this is that the ground of complaint, any deficiency in the service of bank or NBFC which actually fails to resolve it within themselves, then the complaint will be filed to this RBI integrated ombudsman, okay. So there are many ways to file the complaint: online, through online, to calling their toll free number, or to emailing them, okay. And what is the process? Once the complaint is received, then they will be scrutinizing the complaint. If it's said to be true, there will be a process for conciliation or mediation, and then it will go to the ombudsman if it is unresolved, okay. And appeal lies with the RBI Consumer Education and Protection Department. This is very important. So there can be a question related to the thing, the appeal of this particular scheme lies with which of the following authorities? So the answer should be Consumer Education and Protection Department, okay. And these are all some of the data as of 23 to 2024, and they have solved around 2.68 lakh cases, and disposal rate is more than 98%, okay. And average resolution days has been reduced from 57 to 33. And this is important: new ombudsman offices set up in Shimla, Chennai, Kolkata for greater outreach, okay. So what you have to note down from this particular scheme is that what are the schemes that have been unified under this integrated ombudsman scheme, launch year, and coverage, okay. I hope this RBI integrated ombudsman scheme is also clear to you now. Moving to the next thing, public tech platform for frictionless credit. So it was launched by RBI in 2023, and it has been developed by Reserve Bank Innovation Hub, a wholly owned subsidiary of RBI. Okay, what is the aim? Aim is very simple. It this has been came into force to resolve the problem of delayed, paper heavy and costly credit delivery, especially for the primary sector lending, for example the farmers, MSME and small borrowers. To make the process hassle free and to speed up the process, they have come up with this public tech platform for frictionless credit, okay, based on the RBI vision of credit anytime anywhere through the digital public infrastructure. Okay, so what are the features of this particular PTPFC? It has an open, inclusive and interoperable platform which is free for all lenders. Okay, and this act as a digital public good, and this facilitates instant frictionless credit delivery, and it is paperless. It means they need not we need not submit any physical form of paper or any go through the delay process. Okay, it will just integrate the KYC of the banks, your Aadhaar, your PAN and GST, land records and account aggregator data. Okay, and it works on the important point is that it works on the consent based data sharing, that is the borrowers will give permission for lenders to fetch the verified data. Okay, and it also supports the end to end digital lending. Okay, what is the important of this particular thing is that this particular initiative is that it promotes the financial inclusion and it lowers the credit cost. Okay, and what are the components of this particular public tech platform for frictionless credit? Participants, banks, NBFCs, cooperative banks, digital lenders, all can be the participants. Okay, who would be the borrowers? As I told you already, the borrowers would be the farmers, MSME, small businesses and individuals. And technology backbone, we know that it is a technology backed up initiative built on the APIs and the open digital infrastructure, and it will use the account aggregated framework for data sharing. Please let me know in the comment section about the account aggregator framework which you would have come across definitely. Okay, to check your basics related to this particular scheme. Okay, linked with government databases, as I already told you in the features, it is paperless. It integrates various details of the borrower. Okay, and types of loan that can be availed from this particular public tech platform for frictional credits are your Kisan credit card loans, dairy loans, MSME and personal loans and home loans also, where to be expanded gradually in a gradual manner, but the first three are covered in the initial phases. Okay, I hope this public tech platform for frictionless credit is also clear to you. The main objective is to uh, promote financial inclusion and lower the credit cost. Okay, I hope this initiative is also clear to you now. Now moving to the next, that is the RBI's UDGAM portal. What mean by UDGAM? It is nothing but Unclaimed Deposits Gateway to Access Information. Again, this was also launched in the year 2023 by RBI. And what is the purpose of this particular RBI UDGAM portal? It actually provides a centralized platform for citizens to search the unclaimed deposits or accounts across multiple banks. See, it is very simple. Many of us, including me, would be having some accounts which are dormant, where we will not be using any that account for any purpose. Okay, so to get data related to that unclaimed deposits or accounts, this UDGAM portal has been launched by RBI in the year 2023. Okay, what was the need of this portal? Because we all know that the rising volume of unclaimed deposits in bank due to inactive or forgotten or nominee ignorance. Okay, before UDGAM, what was the process? They have to check with each and every bank separately. Now it has an integrated system. It is a centralized platform where one can see all their bank account in that particular deposit of multiple banks in that particular portal. Okay, and what are the features? As I already told you, it covers the unclaimed deposits of multiple banks. Okay, and uh, what is the procedure in which a user can check related to this unclaimed deposits? the name of the user, the PAN or the Aadhaar details, and other identifiers like the date of birth or the native place, etc. Okay, and it is linked to the core banking system for accurate details. So what is the amount that has been still in dormant case of unclaimed data? Okay, and it helps to locate the inactive accounts or the savings account and unclaimed fixed deposits also. Okay, so one important key takeaway from this is that you have to know what is this unclaimed deposit means. See, unclaimed deposit is nothing but any deposit amount. It can be your savings, it can be your current, it can be your fixed, recurring, etc. in the blank that has no customer initiated transaction. It means no withdrawals, no deposits, no checks, or no fund transfer for a period of 10 years or more. Okay, so if any account is matching to any one of the criterias that is mentioned above, so that account is claimed as the unclaimed deposit. Okay, I hope this unclaimed deposit, the UDGAM portal of RBI, is also clear to you now. Moving forward to the next important topic, that is your central bank digital currency or digital rupee. We know that it has been announced in the year 2022-2023 union budget, and it as a legal banking via amending the RBI Act of 1934 to through finance bill. Okay, and it has been launched by RBI in 2022 in the form of pilot project. And India is not the first country to do this experiment. There are already many countries that have been using this central bank digital currency or e-currency. Okay, and what are the features of this particular central bank digital currency? See, like a normal currency, it is also a legal tender. Means it have the same status of physical currency. It can be either notes or coins. Okay, and it is issued and backed exclusively by RBI. This is an important point, and this exists only in the digital form, token or account base, and transferability, it is like a cash transferable only, like peer to peer or peer to merchant, etc. Okay, and it is 24/7 bar, it is available. No need for settlement like NEFT or RTGS. You can do it like anywhere, anytime. Okay, and it promotes the cost effective, paperless and secure transaction. As I already told you, it is a legal tender, that is same status as physical currency. Okay, and there are two components of this central bank digital currency. One is the central bank digital currency retail and central bank digital currency wholesale. Central bank digital currency resale, it is for the general public via e-wallets. Okay, like UPI, like QR payments. For wholesale, for banks and large financial institutions for their settlements. Okay, and technology, we all know it uses the distributed ledger technology in some models, can also work with the centralized database like blockchain technologies, and wallets are issued for partner banks. Okay, and users, as I already told you, it is for retail customers also, merchants also, banks also, government agencies also. And present update, this is related to the holdings, number of currency that is being held as a digital currency. So you can use this in your descriptive writing also. Okay, so important point is that what are the features? It is a legal tender, it is exclusively backed by RBI. What are the components of this or the types of this central bank digital currency, and who are the users, and when it was enacted? Okay, and you should note that India is not the first country to do this central bank digital currency. Okay, I hope this central bank digital currency is also clear to you now. Moving to the next thing, next scheme, that is the RBI Payment Infrastructure Development Fund. See, this was developed by RBI in the year June 2020, and it became operational since January 2021. It is managed by RBI, and what is the purpose? To boost the digital payment infrastructure in tier 3 to tier 6 cities and northeastern states where adoption was low. Now, it is nothing but to boost the digital payments. Okay, what are the features of this particular PIDF? The corpus would be of initial 500 crore. which is contributed majorly by RBI. Okay, and it provides subsidies or incentives for developing the point of sale devices, QR based payment acceptance, and mobile based payment services. Okay, and it specially focuses on the public interest segments like transport, healthcare, government payments, where the payments can take place using the digital mode. Okay, it is nothing but the boosting the digital payment infrastructure in tier 3 to tier 6 cities and in northeastern region where its adoption is slow. Okay, the participants, we all know: banks, NBFCs, payment service providers, card networks, etc. And infrastructure supported: point of sale machines, biometric devices, digital QR code, UPI acceptance points. And target areas, as I already told you, tier 3 to tier 6 cities, or tier 3 to tier 6 cities, northeastern states, and aspirational district identified by Niti Aayog. I hope the details related to this particular RBI's payment infrastructure development fund is clear to you. So the takeaway is nothing but to boost the digital payment infrastructure in tier 3 to tier 6 cities, and RBI is providing many support to initiate this digital inclusion in the places where the adaptability of digital payments are low. Okay, I hope this is also clear to you now. Moving forward, financial awareness messages, FAME. Again, it is initiated by RBI and National Center for Financial Education, and it is actually developed as a part of National Strategy for Financial Education Framework. Why? Because RBI was thinking that the uh, citizens should be financially aware. So for this purpose, this financial awareness messages has been initiated by RBI. Okay, and what is the component? There are three important components. One is your knowledge, behavior, and attitude, and based on this only these FAME messages are created. Okay, it is like the basic awareness financial concepts and encouraging the responsible actions like budgeting, timely repayments of loan, and what is the advantage of timely repayment of loan using formal credit channels, because we all know that in rural areas the mostly it is no the informal credit is in is actually in play. So to avoid all this comes. Okay, attitude: promoting a positive mindset towards planning, long term investing, and adopting financial discipline. Okay, and some recent updates why this was in news and why this is important, because recently fourth edition of this FAME was released. And what are the new focus areas? Digital safety and fraud prevention. Earlier there was these three pillars. Now they have added three more pillars: digital safety and fraud prevention, green finance literacy, consumer rights, and grievance addressal. Okay, and how these messages are disseminated, that is important. We know that the messages are being disseminated, and how these messages are being disseminated through school curriculum modules, through financial literacy centers and centers for financial literacy, and also through the mass media campaigns, social media, and also in the regional languages. Okay, it is nothing but to create a financial awareness amongst the population or amongst the citizen in India. Okay, citizens of India. I hope this financial awareness message is also clear to you now. Moving forward, National Strategy for Financial Education. Okay, for the period of 2020 to 2025, it was released in August 2020, and it has been prepared by National Center for Financial Education in consultation with several regulatory bodies like RBI, SEBI, IRDAI, PFRDA, Ministry of Finance, etc. And why this national strategy for financial inclusion is important? Because the body feels that a financially aware and empower India should be the vision. Okay, so what are the objective? The same we saw it for the FAME na. So those are the objectives, include the financial literacy concepts, because once a citizens are financially aware, that will empower the India. Okay, and this National Strategy for Financial Inclusion 2020-25 is the second NSFC, and the first edition was released in the year 2013 to 2018. Okay, and it is overseen by a group called Technical Group on Financial Inclusion and Financial Literacy. So the previous one, the FAME, and this both go hand in hand. Okay, and they have five important components and three dimensions. The dimension one will be life stages of target segment. So who or all should target it, and the geography dimension two is the geography with focus on vulnerable social groups, and dimension three is the economic sector with focus on informal sector. Okay, so please take a screenshot of this particular image. So this is all about this national strategy for financial education. We know that what are the strategic objective. Financial literacy should be there, active savings should be there, encourage the participants in financial markets, and they should manage the risk, they should know how to repay the loan on timely basis, and they should plan for their old age. So it is about the financial planning. Okay, and there are 5 C's or the components or framework of this national strategy for financial education. What are they? What one first is the content. So they should develop a financial literacy material tailored to different groups under this dimension one. Capacity, build skills for financial educators, trainer and institutions. Community, encourage community driven financial literacy models at the grassroots. Communication, use mass media, digital campaigns, social media and local language to spread awareness. Collaboration, strengthen, coordinate amongst the regulators, ministries, banks, NGOs and the educational institutions. I hope this national strategy for financial education is also clear to you now. It is nothing but creating a financially aware society. Okay. Now, moving to the next, that is your RBI account aggregator. This was the question I asked you in one of the previous slides also related to the RBI account aggregator. This concept was originated in 2016 under the NBFC AA license framework, that is the account aggregator, and it became fully operational in the year 2021 with participation from major banks. Okay, so what is this account aggregator? It is nothing but a consent based data sharing system to make the credit delivery faster and more transparent, and it is the part of RBI's vision for digital India financial ecosystem. Okay, and what are the features? I know you are aware of the credit rating system AA, AB, BA, B plus. Okay, so it is licensed NBFCs regulated by RBI that acts as the data intermediaries. Nothing, the data intermediaries is nothing but they will just fetch data and transfer the data. They will not store any data. Okay, and customers can share their financial data digitally with the lenders or the service providers. What is the advantage of this particular account aggregator framework? It actually helps to go paperless. Okay, no need of any physical documents. Everything will be integrated to this particular data intermediaries, through which it will be passed on to the banks, and this will not store data. These data intermediaries, they will not store data, rather they only fetch and transfer data securely with the customer consent. Okay, and it is end to end encrypted, so there will be no breach of any data, and it makes the lending instant, paperless and low cost. And what are the components of this particular scheme or the aggregator framework? Participants, customers. Okay, participants, who are the participants? The financial information providers, that is the banks, insurance companies, mutual funds, etc. And financial information users, so the banks are the users. Banks are also the users, and account aggregators, we know they are the license intermediaries who will be transferring, who will be aiding in the transfer of data from the lender to the borrower. Okay, and sorry, from the from the lender to the borrower and vice versa. Customers, individual and business who want faster credit access, and technology, we know consent based architecture with APIs and data empowerment and protection architecture, which is end to end encrypted, and the data will be shared based on the consent only. Okay, so I hope this RBI account aggregator is also clear to you now. Moving to the next and the last scheme for the day, the RBI Sovereign Gold Bond Scheme, which is very, very important, which was launched in the year 2015 by the Government of India, issued by RBI. Okay, it is issued by RBI on behalf of the Government of India. It is one of the important aspects of the gold monetization scheme to reduce the demand of physical gold. Okay, and what is the objective? To provide an alternate investment option in gold that is safe, secure, and earns interest. Okay, and what is the form? The form should be demat or physical certificate. Digital is preferred, and denomination in grams of gold. Minimum should be 1 gram, and tenure will be 8 years. That is, you will have the exit period only after 5th year on interest or the interest payments rate. That is very, very important. Tenure is 8 year. You can exit only after 5th year. Okay. Interest is 2.5 percentage per annum, which is fixed on the initial investment, which is paid semi-annually. This is important because there can be a question: interest 2.5% annum, which is paid annually. No, it is paid semi-annually, and this can be a question. And redemption period based on the prevailing market price of gold. Okay, and what is the limit? Limit is very, very important. If someone is individual, they can store up to 4 kg per year. Hindu United Families maximum 4 kg, trust and institutions maximum of 20 kg, and there is tax benefit also, interest taxable as per the IT Act, and capital gains on reduction is exempt for individuals. This is very, very important. Capital gain on reduction of this particular gold bond scheme, the gold monetization scheme, is exempt for individuals. Okay, this is very, very important. And who are eligible? Resident individuals, HUFs, trust, universities, and charitable institutions. And subscription, it can be either through banks, post office, stock holding corporations also. Recent update, see, issue price was around 6,000 to 6,500 per gram, with online application eligible for 50 grams per discount. So this is related to the subscription rate of the sovereign gold bond. So what is the main idea of this sovereign gold bond scheme? Is nothing but to provide an alternate investment option in gold, which is safe, secure, and which will also earn interest. Okay, I hope this RBI sovereign gold bond scheme is also clear to you now. So we have seen around 6 to 7 schemes related to the RBI, which is very, very important for your upcoming RBI Grade B examination. So kindly go through the lecture properly and go through the informations whichever we have been discussed for a while till now. So if you're looking for your NABARD preparation also, you can check out Clarity for Sure's NABARD mentorship and test series program, the link of which will be given in the description box below. Okay, so thank you so much for watching this video. If you have any doubts related to the video, please let us know. I will meet you with yet another session. Until then, have a great day. All the very best.